Hey guys, want to welcome everyone to another episode of the Forex Tech Magazine. I want to welcome all of our new viewers and I also want to welcome everyone who's been with us since day one, our day oneers, right? Before we get too far into this, what I want to do is I want to go through and do some good housekeeping. I want to go through and talk about our disclaimer. This broadcast and our sorry, trying to do multiple things here. I want to go through some disclaimers here. This broadcast and our blog and everything associated with us should not in no way be interpreted as us giving you financial advice. This broadcast and everything associated with Forex Tech Magazine is for educational and entertainment purposes only and should be considered as such. If you are in need of financial advice, our recommendation to you would be to go out and seek the assistance of a competent licensed professional. Okay? Now, with that being said, let's get into this. All right? You came to talk about trades and how to learn how to trade and how to take advantage of this market. And that's what I came to talk to you about today. All right? Now, what I want to do is I want to just kind of go over real quick some things that you should be aware of in the market, right? And some things about that you should be utilizing to kind of help you trade the market and become a better trader, right? And one of the things that you should be looking at alongside your chart for whatever currency pair that you're trying to trade is you should be doing some comparisons of the single currency such as the dollar, right? And just kind of see how what its trajectory is. Give it a little bit of time for analysis to kind of help maybe get some confirmation for whatever currency pair that you're looking to go into. Okay, and what I mean by that is if you got something that's gonna be paired with the dollar, Great Britain pound dollar, Japanese yen dollar, or dollar yen rather, or the Aussie dollar, U.S. dollar, New Zealand dollar, U.S. dollar, or even the U.S. dollar, Canadian dollar, is you can really find out a lot, especially in these times right here where the market is kind of going crazy, as far as what kind of expectations you should have for that currency pair as versus the dollar. And so what I want to do is I just want to show you something real simple, right? It's a little tip of the day, if you would say, so to say. Go ahead to your Smart Trader tool, click on the bottom, boom, bow. And once again, if you haven't done it already, go and click on the link below, or go to our website and click on the link there for the Smart Trader trading software, right? Really good software. We use it to trade all the time. And just full disclosure, we are an affiliate of the Smart Trader trading software, and so that just means that hey, if you happen to purchase the upgraded version of this at some time in the future, and you use our site to obtain the basic, well, then we'll potentially get small little commission for it, little tchotchke for you using it. That helps us keep this channel going and helps us with just a couple of little overhead costs and stuff like that. It's not anything life changing, anything that's gonna have us going off to the Bahamas or the Virgin Islands anytime soon, but it does help. Okay, and if you find value in what we're doing, that's one of the ways that you can say thank you. We don't ask for donations or tips or anything like that, but we do ask that if you're gonna purchase any of the tools that we show here on our sites and on our streams, that you would use us to make that purchase. Water. All right, so the reason why I'm showing you this right here with the US dollar is I'm just kind of looking at this right here, this trajectory over time, right? And this right here started back in April, right? Prior to that, it looks like it was trending a little bit sideways, and prior to that, it was going down, right? So look over here. So from about January up until April 16th, the dollar was just kind of trending sideways. And prior to that, it was at a downward trajectory. Well, how can we use this information? Right now it's going up, but it looks like it's coming back towards the trend line. And if you notice, and if based on the conversations we had before in the past, that usually when a dollar comes in, it hits the trend line, typically bounces up, and you can see right here where it did come down, hit the trend line, bounced up a little bit, hit it again, bounced up significantly. Now it's coming back down to it again. Now your question may be, well, okay, Lewis, that's great. I see the trend line, but how can we use this? I mean, how can this help us with our trading? Well, I'm glad you asked. Because one of the pairs that we trade during this hour, right? We're always doing what? The London Open, right? And why are we doing the London Open? Because there's a lot of money that comes into the market during the London Open, right? I know it's repetitive. I say it every single day, right? But if we look right here, I mean, this thing matches up pretty perfect, right? In January, this too was moving sideways, which is the Great Pound US dollar. Prior to that, it was moving up while the US dollar was moving down. Ooh, you starting to see something here? Now, as of April the 16th, same exact day, right, when the US dollar was starting to make its move to go up, the Great Britain pound was making its move to go down, right? Ooh, you're really starting to see something here now, right? Boom, boom. Let's see here. See something. Okay, now this right here has broken the trend line, right? The US dollar has not. US dollar has not, right? US dollar is still on the trend line. So one or two things are going to happen. Either A, this thing is going to break through, right, and continue to go down, right? And if that's the case, then it's definitely going to mean that this right here would continue to go up. Or what may happen is that that dollar is going to hit that trend line and it's going to go back up again. And if that's the case, then you can expect this right here then to potentially go down, right? And the reason why I point that out to you is because we're already kind of in a downtrending market anyway. It looks like it's starting to make its way up, right? It's kind of coming out of a downward trend, like it's trying to go up and out, right? But the reality is it has some resistance that it has to come in to play with, right? If we look right here, boom. Let's put these trend lines on there, make it a little bit easier to see. Boom. All right, so this right here was a position of support. Came back and turned into resistance. Turned into resistance because it also correlated with the trend line going down. Still is resistance. So now the question is, will this act as resistance for the Great Britain pound US dollar today, right? This is either going to be resistance and this thing's going to come back down, or it's going to continue to go up and maybe try to retest it and then go back up again, right? Won't know yet, right? It hasn't completed this move yet, right? But I'm telling you this is because when you look at where the US dollar is positioned at over on the other chart, it really got me thinking that, hey, you know what? This right here could be oversold, right? Because all you see is just sell several days, right? And it could get pushed up. And part of the reason why is because of some of the fundamental information that's coming through the market right now with interest rates rising, with the fact that the economy is tanking, people are looking for places to put their money at. And around the world, the dollar, the yen, and usually the Swiss franc tend to be three key places where people look to put their money during a volatile time, right? And if that's the case, and if that still holds true, then that means then that that is definitely a catalyst. What we've been having here over the last several days is a catalyst to be able to get some positive push in the U.S. dollar. So anyway, I just want to make you aware of that, right? Because I think it's good information, and I like to share good information when I can. All right, something to be aware of, something to kind of add into your toolbox, and maybe use it to help you become a better trader. Okay. Now, when we get here today, what I want to do is I want to look at some stuff that we did yesterday. I know when I left off yesterday, I said I wasn't really sure what I wanted to do. I didn't know if I wanted to buy, sell, or hold. And what I want to do is I want to put two sell positions on. Right. One of them hit, the other one didn't at all. So I just want to closing that one out. The one that hit actually, it hit, and unfortunately, it went in the wrong direction. But the good thing is, proper money management skills were in place as usual, right? And so we still came out to be profitable overall, right? But what I want to do is I kind of want to walk you through that trade, both of these trades, so that way you get an idea what it was that I was looking at, what the thought process was, and we'll see what we can do right. See what went right with it, and we'll look at what went wrong with it, and then we'll also look at what can we do better next time. All right, as usual. So let's get into this. Let's see here. So the black line is my entry line, and I'm going to put a red one here, and that's going to be my stop loss. All right, and then of course, when I do the green, that's going to be the take profit. Let's see here. Let's see. All right, let's see what we got here. Now, this is the daily chart, so let's go break it down to our hour chart. All right, as we usually do. Right, and we look at the hourly chart, so that way we can find our 3 o'clock candle. As always, where are we at? Boom, bow, boom. All right, so here's the 3 o'clock candle here. All right. Now, when I was looking at this yesterday, and you guys remember the recording from yesterday, you know that we were talking about these supply and resistance zones here in the market. And I was telling you about, hey, we've crossed some, and it looks like the market is getting a little top heavy, and it's potentially looking for an area to try to get back to support, right? I was right, as usual. Just joking with that one, guys. Just joking. But there's always a but, right? I was early, as usual. As I sometimes can be, which doesn't make for good. Doesn't make for a good trade, because being early is just like being wrong. Period. Just being honest with you. If you're too early, you might as well have been wrong. You were wrong about it, because guess what? It's the same thing's going to happen. You're going to wind up getting pushed out. All right, so let's look at this right here. So I just drew some. Oops, these are all green. That sucks. Put it black. What was my take profit? Okay, that's what it's right there. It's right here, black. All right, cool. So let's get back to the 3 o'clock candlestick, and it was boom. Okay, right there. So 3 o'clock candlestick, right? Perfect. Uh, resistance was up here, right? As a matter of fact, it was actually a double top, and I think we discussed this, right? It came up here, and then it came up here, right? And the idea was that if, you know, if it broke here, maybe even here potentially, you can see a good sell-off in this currency pair, right? Now, of course, the move that I was trying to make, what I was going for, was not so much as if it even broke here. I was just saying that, hey, if it could break this, you know, this little zone here, right, then we got a potential take profit right here, right? Just come back to this little area right here. We had a little congestion at, could be potentially a support, you know, just this little area right here. We could get into here, we could take profit, right? It was the right idea, right? And what I had done, because I knew there was some news that was coming out in the market later on in the day. I knew thought it was coming out at 4:30, but they wound up changing it from 4:30 to 4. It was some information about the banking, I think bank liabilities for the Great Britain pound or something of that nature. I can't remember what it was exactly, but and I'm not going to go back and look at it now because it's old. But what I did is I said, you know what? I'm going to trade this, but I'm not going to do with a tight stop loss. Normally, I put the stop loss a little bit above the high of the 3 o'clock candle, right? I say, you know what I'm going to do? I'll put the stop loss up here, right? I'll put it above the 2 o'clock candle, right? So I'm going to give myself some room to breathe because I know some news is going to come out. I don't want to get whipsawed out of the market. And but just based off of you know the fact that we just you know this double top that looks like it was forming here, the fact that she had excuse me resistance right here, right? That just you know once again experience keyed in and said, hey, you know what, this thing should be coming down, and this right here wouldn't be a far stretch for it to make, just because of where it's located at, and that congestion zone is right there, right, which could act as another support resistant area, right? Now, that was the mindset. That was the thought. But what happened was, right, before I left out of the screen, I second guessed myself and I said, you know what? Let's just move. Oops, not that line. So let's just move this stop loss down, right? Let's just put a stop loss right here. I'm just gonna put like 5 pips above, that 3 a.m. candle wick, and it'll be okay. It should be all right. And blah blah blah. And guess what happened, folks? Guess what happened? I don't even have to tell you what happened. You can see, you can look and see what happened, right? Okay. Candlestick went. Let me get this right out of the way. Yeah, the candle went, hit my take profit. I mean, not take profit. Hit my entry point, right? Then immediately proceeded to go back up to the modified stop loss. Took me out of the market for a small loss, right? Then immediately began to go back down again to the take profit point. We even went lower than that, and then came back up, and this is where we're at right now, at this other area of resistance right here. And you got to laugh about it because, had I went with my first instinct, right, and not traded scared, right, and just kept my stop loss back up here, right, I'd be talking to you today with my chest poked out, you know what I'm saying, because, hey, look what I did, made some more money again, just by modifying a little bit of the trade and the rules that I was using, based on the fact, not because of emotion, but because of the facts that I knew that some news was coming out, and the news could possibly whipsaw this currency pair, right? Cannot second guess yourself. What I should have did, and this would have been the right thing to do, because the reason why I moved it down is because I did not want to take a bigger loss than what I had intended, right? So two choices I could have made. I could have made either A, stayed out of the market, right? Because if I know for a fact that news is coming out and it has the potential to whipsaw this currency pair, right? But I still want to be in this trade, and me knowing that means that I need to probably place my stop loss a little bit higher than normal, right? Because I actually put it outside of that resistant area right there, a little resistance area right now. I should either stuck with that plan, placed it outside of that resistance area, or I should have just stayed out of the market, right? Because I said, well, I don't want to risk that, and just in case if it goes against me, I don't want to take that loss. Well, then stay out of the market. Or B, you know, don't use as much leverage, right? Right now, I'm trading off of a standard account, so that means every pip is worth $10, right? Maybe I should break it down to a mini account where every pip is worth $1, or maybe I could just play around with it a little bit instead of it being worth $1, just use a little bit more leverage, and maybe every pip is worth $5. Especially when you're trading these type of news cycles and news events, where and you're gonna have to place your stop loss farther away than what you would normally want. And if by you doing that and having a standard account, it's going to give you a higher potential loss than what you would normally find to be acceptable according to your trading rules, then you need to either stay out of that trade altogether or lower your leverage so that way you can get into that trade, and then that way you can, if you do take a loss, it's going to stay within your guidelines. Okay, because remember, the only thing that we really can control in this thing is how much we're willing to lose. That's it. Everything else is speculation. Everything else is okay. We're basing this off of our analysis, and hopefully our analysis is sound, and we have some sound logic and reasoning behind why we're making that decision. But other than that, it's just hey, nobody knows what the market's going to do, right? I definitely didn't know that it was going to do that. I had a hunch that it would do that, but me just being overly precautious, like let me just pull this thing down, and didn't really think about the other two choices that I had. And hindsight is 2020, and that's the reason why we have these discussions before we even get into what we're going to trade the next day, or even talk about how much we made, or where our losses or our wins are at. Okay, just so that way we can be better traders. Hopefully this right here, and listening to what I'm talking about and what I'm doing is, hopefully you're getting something out of this, and hopefully it's going to make you into a better, more profitable trader. Let's see. So the other one that we were looking at was I think it was the Canadian dollar. That was the U.S. dollar. It was Canadian dollar. Here we go. Boom. Okay. So kind of the same situation here. Let's find the 3 o'clock candle. Okay, so this one through. Yeah. So okay. So here goes 3 a.m. candle. Kind of came in with the same expectations that this thing right here was top heavy, and that the market was overdue for some type of correction or pullback. And so once again had went through resistance, right? Came up and burned out a lot of energy from down there all the way up to here. Figured that hey, this market is due for a pullback, right? So why not now? Why not now? It wasn't now. Looking at the previous candlesticks, where they were all going, it was all trending down. The analysis was that hey, this could possibly trend down as well. So I placed the order entry about 5 pips below this low here, and then I of course put my stop loss a little bit above the the high of this wick here, just in case that the trade goes against us. And the crazy thing happened was that it never triggered my order entry. My entry order never triggered it. Right, price immediately began to go up. Price started to come back down, but before it got down too far, I came back to the trade station and my platform, and saw what was happening. I said, this order's not happening yet, so you know what? Let me just get out of here. And I closed out earlier this morning. Matter of fact, I think I closed out probably around about 7 or 8 this morning, and just said, it's not going to happen. I'm not going to stress it. There'll be others, right? Got out. And I'm glad I did get out too, because guess what? It did come down, and it probably would have triggered my actual entry order, only for me to see it go back up again and knock me out of the trade for a loss. So, at any rate, Like I always say, you know what? Some of your best trades are going to be the ones that you actually don't even get into, believe it or not, right? Um, get out of here. Sorry, I'm just doing some housekeeping as we go along here. So I'm just looking at a couple things, take care of some stuff. Okay, cool. All right, good deal. So those are the two trades that we made yesterday. One was for a loss. One, never got executed, which is cool. It's fine by us. That brings our total up to $342.58 as far as our profit. And just remember where we were at last week. We were down $3,600 by the end of the day on Friday. So we made all of that up over the last couple of days, and we managed to actually put in an additional $342.58, which is good. And we haven't even traded every day this week, right? I think Tuesday we didn't trade. Then yesterday we, barely traded. And thinking, did we trade Wednesday? I think we did trade Wednesday. Yeah, Wednesday we traded, and Wednesday was a really good day for trades. So yeah, didn't even trade every day this week, but you know what? Made a ton of money, profitable, which is a good thing, and hopefully plan on continue to be that way. Okay. So with that being said, let's get out of this one, and let's kind of talk a little bit about what we think is going to happen going forward over the next couple of days with these currency pairs, and also too what's happening in the market overall. So right now, unless you're like sleeping under a rock someplace, it's kind of hard to miss what's happening in the market with the Dow Jones, the S&P 500. If you're here in the States, also what's going on overseas in these other different markets. It looks like there's a lot of unwinding that's going on, right? And so the main takeaway, someone was asking me the other day about, what are my thoughts on it? And my main thought is this, is that, you know what, you got to be safe, play it safe, right? If you are unsure about, sorry about that, car keys just dropped. If you're unsure about how to trade the market, if you're unsure about, where you need to be at in this market, stay out of it, okay? Stay out of it. I mean, there's no need for you to go in there and put money into something and not be sure about what you're doing and then lose it, right? And in fact, if you wanted to, I would say just trade a demo account. That's what we're trading here. This is a demo account, by the way. We're not trading a live real account until probably about 2, maybe 3 more weeks. We just want to kind of get everybody up to speed, give everyone the opportunity to use the software, learn the software, and also too, just to kind of make sure that we're all on the same page as far as skill-wise as trading. And then we want to bring in some real money, do some live trades. If you haven't already, this reminds me, it's a good segue here. If you haven't already, go to the website, right? The forextechmagazine.com, and the information should be right up in here somewhere, right? Go to the website and download that free course that we have there. We got a course there that's it teaches you the basics of trading the Forex market, right? It's a lot of information, but it's good information. It's the basics, right? And the reason why we want you to get that information, the reason why we give it away to you for free is because if you got the basics, if you understand the basics, then you can navigate this stuff, right? This stuff is not that hard. It's not that complicated. I went on a couple of different streams, and I was looking at some people that were streaming, their Forex charts and their setups and all that stuff. And I'm going to tell you, I've been doing it for over a decade, right? And I didn't know what they had on their screen. I'm like, man, they got all these lines and all these things. I'm like, what in the world? And they're doing all that and just to get like 6 pips. I'm like, what in the world are you doing, man? I mean, don't get me wrong. I mean, if it works for you and it's working, go for it, man. If that works, if it works for you and you're profitable, keep doing it, But if it's not working for you, or if you found yourself in a situation where, you yourself are going in and you're adding all these indicators to your screen, and you got all these lines, and you got all these graphs and all the stuff, and you still can't seem to make heads or tails or what's going on, you're still not consistently, profitable in the market, then you may need to go back and just look at the basics. Just take all this stuff off your screen. When I was coming through the ranks, one thing I always was told and everything I was always heard that try not to have more than 3 indicators at any one time on your screen, right? Because more than that, you're just gonna confuse yourself, right? Because you're gonna have something that's gonna be, one or two is gonna confirm with each other, and then the other ones are gonna like conflict with it, and then you're gonna be looking at like, man, which one do I trust? And usually the one you're gonna want to trust is the one that you already have a bias towards anyway. So if I'm looking at short a market, if I got anything that's telling me, yeah, go ahead and short, Lewis, this is the right thing to do. That's the one I'm going to be more geared up to, and that's the one I'm going to be, probably paying more attention to versus the other ones that may be saying like, nah, bro, this is not the, right time that you need to short. You actually need to be looking for buying positions in the market, right? Or maybe you just need to stay out of the market altogether. I'm not going to be paying attention to those because if I got a bias in my mind as far as where I think the market's going to go, and I got something that's telling me like, yeah, it's going exactly like you think it is, man, then I'm probably going to listen to that. So that's the reason why it's important that, one, you understand what indicators to use, depending on what type of market you're in. Like if you're going through a sideways market, all right, there, you definitely don't want to use an indicator that's gonna, you definitely don't want to use an indicator that was meant for a trending market, right, and vice versa, right? If you're going through a trending market, you don't want to use an indicator that was meant for, a market that's moving sideways, right? Well, how do you know that? Well, go study the basics. Go get an online course, and that way you'll understand that, and you'll know which indicator you should be using depending on the type of market that you're in, right? Um, let's look at this currency pair right here real quick. This is the Great Britain pound US dollar, right? Um, and I gotta tell you, let's take it off this one. Let's get rid of this here. Normally I look at everything on the hourly chart, but I want to look at something on the I want to look at it on the daily chart right now. Look at this. Let's see. Let me put this in. And I know we talked about this a little bit earlier today, but I think this deserves a little bit more of our time, just because what we see what's going on in the market right now. I just really don't want you to miss out on a potential good opportunity here to make some money, right? This could be, right? This really could be. Let's look at this right. So we're looking at this right here was support at one point, right? And actually, once again, played to support again here. Price went through it, came back up. This right here was resistance, right? Price came up, hit that line, came back down. Also, it served to be a potential support because price came up. Well, actually, I'm sorry. It served as still resistance, right? Price came up, went back through it, right? I think it's more of a weaker resistance. It was support right here, but as you can see, price the first time going through it made it straight through, right? Came back up, came back down, right? It touched it here and here and here, so maybe that might give a little bit of credence to it, but still it kind of came back up, came back down. So nonetheless, it's definitely something that we want to look at. Price came up through it here and then came back down. Some support and resistance lines are stronger than others, and so that'll be a discussion for another day. So you get into what you call major and minor support and resistance zones, right? You definitely want to be aware of them. The minor ones, you can see like price kind of cut through them. The major ones, price just sits there and it doesn't really don't really budge. Usually the major ones are going to be at your your highs and your lows for a currency pair. Like a yearly high, 52-week high, or something like that. Something that's really like a really big high, or all-time high, all-time low, whatever. I mean, those type of things are going to really be something that people are going to pay attention to. Or if there was a low that was let's see, associated with a significant event, or a high associated with a significant event, those things can typically be more relevant than something like what we have here in the middle, right? I mean, all of them should be All of them should be looked at. All of them should be observed. But just kind of keep in mind, though, that there are some that are a little bit more significant than others. And a lot of times, if you go in the open market, you'll see where people have their options and their future contracts set up to trade around those areas, right? Let's see here. But looking here, right, this previous area of support that turned into resistance, we crossed over into it, right? And that was yesterday, right? It wasn't really a big move. It wasn't like a really big, powerful, bullish move, but it was a move nonetheless. So the question now becomes, right, we're over sitting here today, will this thing continue to move up or will it start to move down? And I'm going to tell you, man, I just don't know. I just don't know. A part of me thinks that this thing right here could possibly move back down, but then the other part of me thinks too that, we could be potentially, because of the Brit exit and all this stuff that's going on, you could be getting ready to look at the first leg of a Elliott wave, right? We're going into some consolidation, and then all of a sudden it's gonna, move up. Or here's the other thing too, right? A lot of times price will move down, is moving in a direction, it'll consolidate here, right? And I don't know if you can see it on my chart or not. Let me try to blow it up a little bit. Let me see. But, let's see. If you bring it back down, let's see. Even if we brought it back down here, that's like 60, 67 pips, right? I'd be willing to bet this thing will even push a little bit farther. I'm almost willing to bet we could probably get like 150 out of this thing. Maybe. Maybe. I think the safe bet would be, but I'm telling you, I think we could get like 150 out of this. But I would say, you know what? I'll probably go right up in here. Let's see. Safe bet would probably be 87, right? I'll say we could probably get about a good 87 pips out of this right here if we go in and we trade it right. Potentially. Once again, it's not guaranteed. So don't sit there and say, well, oh, Lewis, you told me we could get 87 pips and I put my money in and all of a sudden it didn't go that way. I'm just saying because this thing right here it's not making a bullish move. I mean, it's just not bullish. I mean, it's not like, it's just, I don't believe it. I believe that, okay, yeah, it's a bullish candlestick. I just don't believe that it's still headed up because I think that, given this resistance zone here, right, where we're seeing price go up and come back down and we're right there at it. We just went through this, resistance line here. And then the fact that there's no big news coming out tomorrow, one or two things are going to happen. Either this thing is going to sleep, going sideways into the weekend, right? Or it's going to pull back. And the question is, if it pulls back, where does it pull back to? Right? How far will it go back? And that's the question. Question of the day. All right. And once again, I could be wrong. I don't think I am, but I could be wrong. But these are the type of things that you got to do when you're looking at currency pairs to trade. You got to get in here, you got to dig in, and you got to look, and you got to see if it makes sense. And if it makes sense, go for it. If it doesn't make sense, then just leave it alone. In fact, considering the fact that this right here is looks like it's kind of moving sideways. I don't know. Let's look at another one real quick. Hold on a second. Let's see. Japanese. And the reason why, and I'll tell you another reason why I am kind of up on that particular pair is just because of the fact that, you know, when we were looking at that trend line with the dollar, that looked special. You know, that looked really special right there. Hey guys, I'm sorry. I'm experiencing some technical difficulties with my folks on Twitch. Let's see here. Something we can do to get this going. There we go, guys. Sorry about that. You know, when you're in a one-man show, you got to do everything, right? You got to be the tech. You got to be the host. You got to be a producer. You got to do everything. All right, so we got those guys back online. Good deal. All right, so yeah. Look over here. All right, good deal. We're all good to go. So, but anyway, what I was saying was, oops, that's the wrong chart. What I was saying was, when we go in and we look at these things, right? We really gotta look at it from a standpoint of, well, how can we, will this be profitable? How could it be profitable? And what's logical? You know, I mean, if we can't find a logical entry point, if we can't find a logical take profit, then yeah, we need to stay out of it. With this one right here, the Great Britain pound, Australian dollar, looking at this, once again, it's crossed through the resistance, and that's really kind of overall theme that I'm getting here. You know, just like last Friday, I was looking to get into the trades because they looked like they were overexhausted, right? And I got in too early that day because everything actually continued to go up, and part of that was, I think, because of the news cycle that was happening. We had the unemployment rate for the U.S. and for Canada, and I think also what the non-farms payroll for the U.S. So it was a lot of information, and it just pushed the market higher versus letting the market do what it naturally do, which was correct itself, and it cost me money, right? Today there is no, there are no news cycles that's coming out, big ones anyway, for the U.S. or anyone else. I mean, I think we have a sentiment report at 10 a.m. Let's check this out real quick. Yep, the U.S. dollar, University of Michigan sentiment report, which that's a pretty big one because it can move the market. You know, once we get a sentiment as far as what we get a feel what the investors think is going to happen in the market. But I don't know if it'd be enough to affect this currency pair in any one way. You know, I don't know if it's enough to push it up even more. I don't know if it'd be enough to cause it to go down. So, looking at this right here, overall, right, went through resistance, went up. Looks like we're coming down, making our way down. It's not a quick down. It's more like a slow, methodical crawl downward. But nonetheless, it's downward, right? You got a high, you got a low, got a high, got a low, got another high. It was a lower high, right? Because lower than this high here, and this high right here is lower than that high. And then this right here is potentially another high, and we won't know until after the 4 o'clock candlestick makes this formation, and this one right here close out. But if that's the case, then it could potentially be lower than this low here, right? And if we stick with our rules and we say, well, hey, you know what, we want to at least do 50 pips, right? Oops, go back. And that would lead us to, oh my goodness, one of these days I'm gonna get it right. Let's see. Well, I wasn't that far. So, 50 pips will put us, gosh, man, it really is going to put us right there. I mean, like right here by where that low is at. And if we're expecting it to make a lower low, well, there you go, right? If we're expecting it to make a lower low, it's going to go back, it's going to bypass this anyway, right? On its way down. So, um, 53 pips at $10 a pip, it's $530 off of one pair, right? So you got to ask yourself, are you willing to do that? Is that the trade that you want to make? What would we be looking at risking? Well, if we do that, then we'd be looking at risking about, I would say about 30, 32. So you figure, let's just keep the numbers round. Risk $300 to make five. Right? It's not a one-to-one, which is good. So you're getting a little bit of leverage from the fact that, hey, if I'm making $500, I'm only risking $300, right? And if you're risking it, and if you are keeping that same leverage with the other trades that you're making, then you stand to make even more of a profit because even if this right here failed, right, and you lost 300, but you go make 500 someplace else, well then you still got a $200 profit. So it's not just a wash. It's not just like a zeroed out, right? Where that account made it, this account didn't, and so it just zeroes it out. No, what's going to happen is you're still going to come out ahead $200, and that's part of the way that we trade is that we're trying to make sure we come out ahead. Whether it be taking better risk to reward positions or just moving that stop loss up. So that way we can have a risk-free trade, right? All these things can be effective to helping you be a better trader. So let's see what we got here. So that was the Great Britain. Sorry, folks, I'm taking notes here real quick because I want to take some notes of what it is that we're looking at and what I'm thinking about here. So the first one we're looking at with the Great Britain pound and the U.S. dollar. So everything that was going down. So we think this right here is possibly going down too. And once again, don't feel like you got to trade every day, folks. Trade every other day. Just trade when you feel like that. Hey, you know what? It's in your advantage to do so. Because the last thing you want to do is go out here and start trading and make a mess of things. Lose a bunch of money. Hey, I want to send a shout out and just welcome one of our guest here was this Messi. Is that it? Messi too? Okay, good deal. Oh, follower now. Way to go, Messi. Appreciate the love. Appreciate the love. Appreciate the love. So let's get back in here. Let's look at the next one. The next one we're going to look at is the Great Britain pound, Japanese yen. Now, this is a special case, and the reason why I say that is just because this one has been traveling sideways for the longest. And if you know anything about the Japanese yen, they love to manipulate that currency. And you didn't hear that from me, but you hear it everywhere else, right? They like to keep their currency pair artificially low, and the reason being is because Japanese yen tends to be one of those safe haven currencies that when the world starts getting topsy-turvy, people like to kind of rush in there because the Japanese have been so consistent and so steady, right? But the Japanese government, of course, Japan does not like that, right? So what they like to do is try to, at every turn devalue the currency so that way people won't want to be in it, and then also it makes it easier for them to have better trade relations with their neighbors, right? Because it costs them less to buy their products. So, but anyway, looking at this right here, gosh, man, this right here, it's just moving sideways, and I could easily go in and just say, hey, you know what, let's just go ahead and short this one. Man, I just don't know. And I know you say, well, why would you short this one? Like, what makes you feel so confident in trying to short the Great Britain pound against the Japanese yen? Well, the reason being is just because just looking overall at these other Great Britain pound pairs, they're all screaming, "Hey, we're going to be moving down at some point. You need to take advantage of that." I tell you, man, looking at this right here, and like I said, if you look at some of the previous videos, you'll understand where we're going with this. This right here is a, it's a classic sideways move, and I'm not gonna get in it. I won't get into this one right here. Although I'm pretty sure when I wake up tomorrow, I get up later tomorrow, this thing's probably gonna make a massive move down, but I'm not gonna get into it. And the reason being is just because when they're in this channel like this right here, right, when the market's taking a pause, it's just hard to trade because it's just a lot of random up and downness, right? There's a lot of random for no reason at all, moving up, moving down, and it's easy to get whipsawed out of it. And if you look right here, oh, and by the way, just in case you missed it too, let me just drop back and explain something. The reason why you see me draw these support and resistance lines, right? This right here is support line here on the bottom because it's supported price. Price comes down, touch it, bounces back up. Resistance line here at the top because you can go back and you can look where prices went up, touch that line, and then drop back down, right? So we call them support and resistance lines. But the reason why we draw these, the reason why they are so important, and the reason why you need to learn how to draw them if you're going to be a successful trader is because you know how you ever went into a building or you go into a mall or something, and when you go in, right at the entry point, they have a big sign, a big placard up there, and it says, "You are here," right? It says, "This is you, and you are here," right? So it lets you know where you're at, and it also shows you all the different stores and everything inside the mall or different floors, whatever, inside the building, right? Well, doing the trend lines, doing the support and resistance line, all those things help you to understand where you are at in relations to the trade, right? So when you're in the middle of a trade, like this right here, like, boom here, boom here, support here, resistance up there, right? This thing can move anywhere, right? So it's not a high probability trade for us because this thing could take off and go straight up and hit resistance, or this thing could drop and go back down and hit support, right? So it's not really a high probability trade for us. What we like to do is if we're going to come into something like this, we want to trade, right? We want to place a trade, especially if we're going to buy. We want to buy as close as we can to support. And if we're going to sell, we want to sell as close as we can to resistance. We want to be up there and around that resistance area and want to be seeing price looking like it's going to go through it or price making its move through that resistance area, right? And then, some other things that we like to do too is maybe use our charting software here, right, to maybe look at some candlestick patterns for us so that way we don't even have to even think about it, right? And it just kind of like just tells us that, hey, you got a bearish engulfing or you got some bearish tweezers going on or whatever the case may be. But if it's showing up around those support and resistance lines, it gives us further confirmation that we're making the right trade and that we're going to be in the market is going to be moving in our direction, and so it's okay for us to go ahead and make that buy or make that sell. Given the fact that we're kind of like in limbo right here, right? There's no real direction, no real anything. I'm going to say this right here will be a no. I'm just going to make this as a note, right? That this is not something that I personally would want to do. Okay, so I'm not even coming back to them. Let's see, how are we on time? We got 5 more minutes before we get out of here. About 5 more minutes. Okay, so this right here, once again, is up by a resistance zone, right? It was resistance, and then it turns into support. Remember that? Support and resistance are interchangeable, right? What was one day support or resistance at one point in time can, quickly turn into support for a currency pair to keep it afloat and keep it pushing upwards, right? So we're right around here at this zone. Once again, just seeing how you don't have any type of upward momentum, it's just moving sideways. Man, given the fact there's no news coming out tomorrow, man, I'm gonna tell you, I don't know about this one, but I got a strong inclination to go ahead and just short it. Looking at the daily chart, even more so. Look at that little tweezer right there. Look at that top. Formed another top here. This right here is resistance. This thing is gonna be coming down. The question is, when is it gonna be coming down? I'm gonna say I want to short this right here. I want to try to short this right here, right? I could be wrong on this. Yeah, we're gonna keep the stop loss tight. So that way, if I am wrong, I'm not gonna lose that much. But if I'm right, we're gonna break the, we're gonna drag down the take profit, maybe pad it a little bit more to see if we can't get a bigger return. So I like this one a lot. And the last one we're going to look at is the Great Britain Pound New Zealand Dollar. Right, this is still some stuff from earlier today when I had the we did yesterday. I'm just going to take all that off. Okay. And what we'll do, we will compress it. Maybe not. Let's see, compress it on the hour side. Put some lines up in here. Let's see what we got. I'm trying to go a little bit faster, folks. These might not be exactly perfect, but I just want to go a little bit faster so that way I make sure we squeeze everything in the 4 o'clock time.